Understanding UK taxation laws is crucial for everyone, from individual taxpayers to large corporations. These laws directly impact our income, investments, and even our homes. Staying informed about the latest changes is essential for making sound financial decisions. In 2025, the UK tax system underwent a series of significant changes. These changes, implemented by the current government, aim to increase tax revenue and create a fairer system for all. This essay will guide you through the key updates, explaining their implications in clear and simple terms. Whether you're a homeowner, an employee, a business owner, or an investor, this guide will equip you with the knowledge you need to navigate the UK's evolving tax landscape. Keep reading to learn more about how these changes might affect you. One of the most significant changes in recent years is the abolishment of the non-domiciled or non-dom status. This status, which previously allowed some UK residents to avoid paying UK tax on their foreign earnings, was seen by many as unfair. Effective from April 6, 2025, the non-dom status has been replaced with a residence-based taxation system. This means that anyone who resides in the UK for a certain period will now be liable to pay UK tax on all their worldwide income and gains. To ensure a smooth transition, a 3-year period has been implemented, allowing individuals to adjust their financial affairs. This change, driven by the government's commitment to fairness and increasing tax revenue, is expected to generate an additional £2.7 billion annually by 2028 to 29. However, it has also sparked debate, with some arguing that it could discourage investment in the UK. National insurance contributions, a key source of funding for the UK's social security system, have also seen a significant change. On April 6, 2025, employer contributions rose from 13.8% to 15%, directly impacting businesses' operating costs. This increase has raised concerns among business leaders, with some major companies like Sainsbury's announcing job cuts in response to the added financial burden. Other companies, such as M&S and BT, are considering price increases to offset the higher costs, potentially impacting consumers. Alongside the increase in employer contributions, the secondary threshold for national insurance was also lowered from £9,100 to £5,000. This change means that employees now start paying national insurance contributions at a lower income level. To help offset the impact on low-wage earners, the national living wage has been increased to £12.21 per hour for those aged 21 and over, and to £10 per hour for those aged 18 to 20. Section 4, Stamp Duty Land Tax, navigating the property market. The UK property market has also been impacted by tax changes, with the government making adjustments to the Stamp Duty Land Tax, or SDLT. Effective immediately, the nil rate band for SDLT has been lowered to £125,000, meaning that buyers now start paying SDLT on properties above this price. This change has made it more expensive for some to enter the property market, particularly first-time buyers. To address this, the government has reduced the first-time buyer threshold to £300,000. This means that first-time buyers can now purchase a property worth up to £300,000 without paying any SDLT. These changes to SDLT are part of the government's ongoing efforts to manage the housing market and make home ownership more accessible. However, their long-term impact on the market remains to be seen. Section 5. Conclusion. The UK's evolving tax system. The UK's tax system is constantly evolving, with the government making regular adjustments to reflect the country's economic climate and social priorities. The recent changes discussed in this essay, including the abolishment of non-dom status, the increase in national insurance contributions, and the adjustments to SDLT, are just some examples of this ongoing evolution. These changes have sparked debate, with some welcoming the government's efforts to increase fairness and revenue, while others express concerns about the potential impact on businesses, individuals, and the economy as a whole. As we navigate this evolving landscape, staying informed and seeking expert advice when needed is crucial. It is important to remember that tax laws are complex and subject to change. This essay provides a general overview of some key updates, but it is not a substitute for professional financial advice. Always consult with a qualified tax advisor for personalized guidance based on your individual circumstances.